Welcome to my investment pitch, where I will be comparing Visa and Mastercard. Visa and Mastercard are global payments technology companies operating worldwide. They offer cashless payment services, most notably their credit and debit card offerings. Looking at both companies' relative wealth charts, we can see that they have both created wealth and reinvested in their businesses in the recent past. One key difference is that the market is more pessimistic about Mastercard's future CFROI. If we look deeper, it is clear that improving margins have been the main driver behind the CFROI growth for both companies, with sales growth not improving in any significant way. While we would usually see asset turns suffer as a result, throughout the period of improving margins, asset turns have remained fairly stable. But how has this past performance been reflected in the stock price momentum for both companies? In the case of Visa, we see a company with consistently positive earnings surprises and CFROI revisions, which have translated into a positive price momentum over the past 18 months. In the case of Mastercard, we see even stronger momentum. Revisions to CFROI and earnings surprises have been higher in absolute and relative terms than its competitor, which has translated into stronger price momentum. If we consider potential risks for both investments, both Mastercard and Visa have similar risk profiles. The relevant figures show that there is little risk of default or accounting misrepresentation from either company. With usage rates for Apple Pay and similar systems proving disappointing thus far, and with competitors such as PayPal becoming partners, competition risk is also low. This lack of competition, however, may have its problems, the biggest being greater regulatory scrutiny. With consumers moving towards cashless payments in ever-increasing numbers and recent product offerings making serious inroads into emerging markets, I believe that Visa warrants a lower rate of CFROI fade than in the default HOLT case. If we factor in this change, the HOLT model now gives Visa a 16% premium over the current market price. While it seems likely that Mastercard should also receive a more favorable rate of CFROI fade for similar reasons, I will for argument's sake keep the default CFROI fade profile. Even in this scenario, HOLT gives Mastercard a much higher upside, with its bearish scenario still implying an undervaluation of Mastercard's stock. In conclusion, I would recommend both companies as a buy, but because of the larger potential upside for a comparative level of risk, I would pick Mastercard as an investment over Visa.